All Level Up podcast. Today, I'm very, very excited to be joined by Mr. Buller. Mr. Buller, do you want to go ahead and just give a quick introduction before we go ahead and dive into today's episode?
Yeah, I'll try to be super quick, although everyone likes talking about themselves. Thanks for having me, Zayne. Yeah, I'm Stephen Buller. I operate Buller Accounting, which is a small firm, myself and one employee, and we focus on small businesses. Basically, take care of bookkeeping, taxes, consulting, whatever they need help with.
Perfect. I love it. I want to dive right into some of the talking points just for today, just so we can provide as much value to the listener. So in terms of, every project has an income model, right? So how do you know which one is right for your business and how you should really structure that to really maximize revenue?
Yeah, and you mean how you're looking at your income, or what reports you're looking at, or is that the
exactly reports? Yeah.
Yeah, so I always hate to say something like one size fits all, because every business is unique. Every owner has their own goals and all that stuff. However, I always recommend to every single one of my clients, you should be looking at your profit and loss regularly. What that means to you might differ. It should be at least once a month, that's for sure. But your profit and loss is really your scorecard, right? If this is a game, how do you know if you're winning or losing? You need to know the money coming in, the money going out, and what's left over. So I think that the P&L is incredibly important. There are some situations where cash flow gets challenging, interesting, very important for small businesses, especially those that are kind of bootstrapping it. We can't all just go to Wall Street and get $1 billion, right? So most small businesses start up with individual and friends and family investing money. So I think paying attention to the cash flow is important. But what I mean by that, your profit and loss is likely going to be on a cash basis. And we don't need to bore the listeners yet with what cash versus accrual means. But if you've heard those words, great. Cash basis just basically means when money comes in the door, you have income. When it goes out the door, you have expense. So if you're looking at your business that way, you're going to be able to see what the net flow is basically. And then maybe you just need to account for the timing of invoicing, right? If I invoice $1,000 today, it doesn't mean I'm getting it today. Or bills, similarly bills, right? If I get billed $1,000 today, I don't necessarily need to pay it today. Maybe I can stretch it out a little bit. But for the most part, I really, really stress the profit and loss. The other kind of big accounting financial statement is the balance sheet, but we won't bore you with that yet.
And so as a business owner, how do I really understand and then analyze all of this financial data? Is there one specific go-to strategy that you have that it might be a little
No. That's a great question. No, and definitely not a secret. No secrets here. So so let's go back to the profit and loss, right? And just a teeny bit of technical stuff. Your profit and loss in your balance sheet. In accounting, every single account, and when I say account, I mean something like utilities expense or service income or Bank of America checking account, right? All of these accounts exist either on the profit and loss or on the balance sheet. When it comes to what accounts you actually have, there are definitely some standards, and you can very easily go Google, if you're starting up a restaurant, Google common chart of accounts for restaurants. But what's really important, and I think where the work happens and where someone like myself can actually add a lot of value, is working with a business owner to ask them, how do you want to see this business? What is going to help you make decisions? Many kinds of decisions that you need to make, right? So it's one of those things where accounting is just a system to track the business as closely as possible in dollars and cents, right? What's actually happening. So if you just have one income account, you can see how much income you're making. But what if you have two drastically different products or services? Maybe you want to break that out and start looking at it, by product line. And that kind of stuff, that's where the business owner can actually help themselves. You have to put that data in ahead of time. You have to record it in advance to be able to look at it later and say basically what's been happening, right? So if I can see those two business lines, if we're talking about that, if I can see them over time, see what's going up, see what's going down, see what else was going on in the business and how it related, that's how you can start understanding the usually, well, often complex decisions that business owners have to make.
Mm-hmm. And I know you alluded to this point earlier, and I love that you've touched upon it, because every single business is variable, right? I mean, they're all, within one industry, but how they manage operations, especially from a financial standpoint, is different. And so you discussed just business awareness from that personal standpoint, allowing them to understand how they want to go about cash flow. Mm-hmm. Are there key components of this financial plan that one industry should take a look at more specifically than another?
Boy, I think more of it is going to have to do, you've heard me talk about this before already. It has, in my opinion, so much of this has to do with the owner's goal with their business. Mm-hmm. It's very easy to look at the big boys and gals and try to copy them, and often that's a very good model, right? If they're successful, whoever you're trying to emulate, right? If you look at someone successful, it's a great idea to try out what they're doing. But I think it's really important that owners critically look at, what am I trying to do with this business? Most small business owners, I think, and from talking with small business owners, unintentionally basically get into working 80 hours a week, working crazy just to kind of keep afloat. And often it has to do with not really thinking about the goal. Like, what am I trying to get out of this? How much do I want to work? How much do I want to make? How is that going to be possible? And I think asking these hard questions up front is what's going to make you be able to decide, is this actually a viable business idea? Can I actually do this with the goal that I'm trying to reach? So I don't know, maybe I moved off on a little bit of a tangent there, but ask another question if I didn't answer.
I like it. So just to double click on that, how do you know? So if I was, a business owner and I was devising some sort of plan, should I go through my financial structure prior to coming to you just for some more reference, or prior to moving forward with executing, my product line? Or is this something that after I've devised all my products, then I should go and do the most sustainable pricing model predicated on everything that I've already decided?
Gotcha. No, I think all of these pieces work together, right? So I guess in a short answer, I will say your business plan should not start with the finances, trying to figure stuff out. One really, really cut and dry example or reason for that is the pricing concept of how am I going to price my products. That's really more of a marketing exercise, at least initially, right? You need to know if there's a market for it. Will anybody pay this price for this product? If that's the case, then you can start to figure out what your numbers are going to look like. Okay, how big is the market? Then how much can I actually capture of that market? Then how much can I expect to sell, et cetera, et cetera, et cetera. But I think that the finance and accounting side of things need to help facilitate the larger vision of the business, the product, the market, the people who are going to be doing it, and see if it is something that can be financially viable. So I guess what I'm saying is, like, I don't think you should start with that, but when you get to that point, you need to be realistic. Does this break my plan or not? Is this actually financially viable?
And so in order to understand whether it's viable from that financial standpoint, you have to understand revenue and expenses, right? So how much is coming in and then how much is going out. So how do you find these values and then understand them, but then also like just project the grow rate, based off of what you know in terms of industry knowledge or past things that have happened with companies?
Yeah, so I saw this note and I wanted to focus in a direction that, if you want to bring me back, please do. But the way I was looking at this, like, how do you quantify your growth potential, right? What does your market look like? I think, again, some maybe non-financial advice is very good financial advice, and I'll tell you why. So I think it's really important this day and age to know your niche, right? Don't try to start the next Johnson & Johnson competitor or something like that, right? Focus on a product, focus on a market, know that there's demand there. And I mean, like, personally, if I was going to invest in a company, you hear a lot of startups say something like, "Oh, this is going to be $100 billion market, next year," or something like that. If we can just capture 1% of it or whatever. Okay, but that's not really a plan. Mm-hmm. Whereas if somebody comes to me and says, "Hey, there's this niche market that we are experts in. We know the market, we know the people, and we think we can capture 10% of this." I don't know if I did the math right, but $100 million market. Now you're talking about the same potential sales, but I'm going to be much more convinced by someone who can actually see a means of capturing some significant market share. Doesn't even need to be 10%. But this idea of like, oh, it's $1 trillion market, we just need to capture 0.1%. Mm-hmm. That's kind of just that's wishful thinking, in my opinion.
Yeah. Okay, perfect. I like how you describe that. Just so there's a bit more, credibility behind the idea, and then businesses don't know. Okay, I'm going to moonshot my projection. When they can stay more realistic.
Exactly. Yep. And I mean, it just shows like. It shows that you're actually doing the work, in my opinion. Anyone can say like, "Oh, if we can just capture 1%," or like, "Okay, it's a big if." Like, what is your plan?
Right, because there are so many things within the market that are unidentifiable when you actually go to market.
Absolutely.
And so, things like we've seen with the pandemic, all of these threats to industries, nobody predicted this, and so you can't moonshot that pricing model towards the beginning. So just tapping into that. When your finances aren't going well, what sort of changes do you need to make in terms of on-the-fly thinking, I guess?
Yeah. So the typical CPA will, I mean, where they make their bucks is by cutting your expenses, right? They say, "Oh, why are you spending so much on the phone or this, that, or the other thing?" And there's a place for that, right? If I'm assuming, when you say if your finances aren't looking so good, it probably means you're bleeding money, right? More is going out than is coming in. That means there's two sides of that coin. You can either make more money or you can spend less money. And the real risk is that you cut expenses that are going to impact your revenue, right? And the easy, I'm sure you already know what I'm going to say, right? If you start losing sales and your solution to that is cutting your marketing budget, that's probably going to cause a downward spiral where you have less sales, so you cut more of your budget, so you have less sales, so you cut more of your budget. So that's not a long-term solution. It might be a short-term solution, or doing better marketing or getting a better firm or whatever's happening, right? So I definitely think there's, let me say, usually fat that can be cut. There's usually fat in the expenses when things are going well. When a company's flush, they might be spending money that they wouldn't otherwise. I worked for a biotech startup that bought two $5,000 espresso machines because one wasn't enough, right? So there's that kind of spending that goes on when there's plenty of money. When things get tough, you may need to tighten your belt, so to speak, a little bit. But also, I'm a bigger fan of earning more revenue over cutting more expenses, if that makes sense.
Yeah. And I want to nerd out about one thing really quickly here as we transition into the next point. So instant gratification, especially from a financial standpoint, in terms of seeing sales right away, is really something that has become an anomaly, right? It's not something that happens for every business. And so we've touched upon a bit of getting investing money like at the start from friends and family. How much money should you think about investing in a business upfront?
Yeah. So I'll go at this from two angles. So the first is, you said, how much should you consider investing, right? So to me, there you're talking about kind of like the individual risk, somebody getting into it. So my short, not so fun answer to that is, don't invest more than you can afford to lose. That's because businesses fail. And I think that our culture has crushed a lot of entrepreneurial spirit out of us. I won't go off on this tangent, I promise, but I'm a pretty big critic of our education system. I think it's awesome that like Deca and stuff like that exists, right? Because there's so much stuff that's missing. And I just think that we need to be willing to fail. We need to be willing to experiment, and we need to find what's going to work for us. So I'm not saying you're going to fail. I'm saying you're going to have some learning experiences. And some of those, I should stop speaking in the second person. I've had some learning experiences, and some of them have been expensive. So always look at it from your perspective. Like, this is what I'm able to budget. This is what it's worth to me. Even if this all goes away, I'll feel like I guarantee you're going to learn a whole bunch. If you start your own business, you're going to learn more than probably 4 years of college, right? So I'm not trying to deter people from doing it, but recognize the inherent risk, and that's kind of from the individual's perspective, right? Then there's the business plan perspective. Well, how much money is needed, right? Because that's the right answer. You need to invest the right amount of money to get the business off the ground and get it to the point where it's profitable. Otherwise, it's going to fail for sure. So that's where maybe you need to combine the two that you just kind of, we talked about, your individual, I guess, risk tolerance / budget, what you have available, with what does the business actually need. And then maybe there's a hole there that needs to be filled with a loan, with a gift, with IPO. I don't know, but then you can find, this is the amount of money we need to get this business profitable, and probably double both your time and dollar budget, because that's usually how it works out.
I love that. And definitely want to have a couple just quick convos off there about some of the things that you mentioned. But just in terms of the realistic aspect of it, how do you know that your numbers are realistic? So, is it taking a look at savings and making sure that you still have 20% of that when you're going ahead and investing? Is it, other quantitative ways to really measure that? How would you go about it if you were to open up a business tomorrow? What would your process be?
Yeah, I think the easiest thing to do is what I mentioned kind of earlier. Is somebody else doing this, and is it working? I think, and I was definitely a victim of this at one point, but I think when we talk business, especially in this country, it's all got to be really sexy with $100 bills flying this way and that, with a 25-year-old billionaire overnight, that kind of stuff, right? That's not regular, and that's not normal. So look at what's working. What are you interested in? Find somebody who's doing that business already. Learn, be sure you do your due diligence, and it's not actually a business that's bleeding money constantly, or a drug front or something like that. But find something that's working, and that's pretty good evidence that it could work for you, right? And I mean, going a little further in that point, often, very often, famous entrepreneurs that we read about in textbooks and stuff, they saw what somebody was doing, and they said, oh, I could do that this much better, because they're missing this, what they think is some key piece of the business. They tweak it, and then they're insanely successful with it, right? So if you can identify that, go to any business, some kind of review page, right? Business you're interested in, look at the complaints, because people complain a whole lot more than they praise. So you will find complaints online, read them, find the most common one, fix that, and you got customers right there. You reach out to those people, hey, come see me instead, and you have customers.
Yeah. I love that. I love that strategy. And then just going back to one thing you touched upon a bit earlier. I know you discussed loans, and so when we're talking about realistic amounts to ask for when you approach a bank, and then obviously payback time, how should we approach this process? But then again, how confident should we be when we tell the bank, I can get you the money back within X period of time?
Yeah. So I think I'm going to answer this in a similar fashion, right? Don't let the bank dictate what's what. They're going to have a whole lot more power than a newbie entrepreneur walking in. But what gives you a lot of credibility is walking in and telling them what kind of loan you need for your business, because you've run the numbers, you've done the plan, and you know what kind of interest expense your business can sustain for how long, right? So I guess that, I'm cheating a little bit, but I think that's how people should think about it. What's reasonable? What can I do in my budget? How much interest expense can I handle? What's the capital I need up front? Again, is this viable, or does this just break my business idea? It's okay to say this isn't going to work and I need to figure out something else. In fact, it's much preferable to do that up front than after you've pitched a bunch of banks or sunk a bunch of money. So that being said, the confidence question. We all I don't know. I should not make a blanket statement. It's easy to be overly optimistic when you're starting out. Again, not trying to stomp on dreams or anything. This is just, it's one of those things like you don't know what you don't know, right? So once you start doing this stuff, you're going to learn a whole lot of things that you didn't know. You're going to need to adapt and pivot and change and figure it out, right? So should you go in and ask for money that you have no intention of paying back? Absolutely not. Should you feel absolutely awful if your business goes bankrupt and you're not able to pay back a loan? No, it happens. It happens, maybe not all the time, but it happens regularly, right? And this can reflect poorly on the business owner if they go bankrupt, but it also doesn't have to, right? This is like the entrepreneur who comes out of an experience like that with lessons learned, with clear takeaways, with clear now I have a track record. Now I've learned all this stuff. I know what went wrong, and I know how to do it better next time. It's not a bad thing, right? So again, coming back to this, like, I really want people to get comfortable with failure. And it's easy to say, and it's harder to do, especially in a time when the average person doesn't have $400 to their name or whatever, right? So it's very easy to say and very difficult to actually make that leap and take that risk. But that's one more reason to start small, to fail small. Hey, start a service business like I did, and you don't have all this upfront capital. You just kind of see if anyone will pay you money. I think that's a good first business to start.
Yeah. My first business, still going through it now, 17 months strong, that's
awesome.
Business.
There you go.
It's been amazing.
There you go.
I mean,
that's great.
There's no upfront cost like you discussed. We don't have to put too much forward. Only thing we have to pay for is the LLC on an annual basis, and that's
it. There you go.
It's very cost efficient.
Get that legal protection up front, and you're in good shape.
So I want to just touch upon the notion you talked about in terms of like failure first. I think that's actually very, very important to beginning your successful journey within small businesses, especially when you talk about like iterating throughout the process and really understanding what you need to do. So really, really love that. And then just want to thank you so much for coming on the podcast. I have one more question here. We're going to go through some speed vocabulary, but really appreciate the time today, Mr. Fore.
Yeah, you bet. No, thanks a lot. It's been awesome.
Of course. So I've got 5 terms here, and I'm just going to go ahead and say them. Just quick vocab session for all of the listeners. So first one is capital needs.
Capital needs. How much money do you need?
Short-term and long-term borrowing.
Less than 1 year or greater than 1 year? Am I doing okay? Am I doing what I'm supposed to do?
Yes. I feel like we're on a quiz show, less than
Yeah,
right? Long-term equity.
Long-term equity. I guess I would think of that as the value you're building up in a business over time.
External sources.
Other people's money is what I think of.
And then lastly, to end it off, returning investments to equity funds.
Okay, so to me that sounds like the ultimate ROI, the ultimate what literally every single investor is interested in, right? So show them how you can give them more money tomorrow than they're giving you today, and you'll get the money.
Perfect. Thank you for playing.
Seriously, that's what it felt like. Lightning round.
Perfect. Thank you so much again. Really appreciate it. And to all of our listeners, make sure to check out all of his sources within our episode description for sure. But Mr. Bloor, appreciate the time. Thank you so much.
Zayne, it was my pleasure. Thank you so much for having me.
I think that wraps it up for today. Thank you again to Piper and Tim for joining us. And another huge thanks to all of you guys who listened in. The team and I are really excited to move forward with the Level Up podcast, and we look forward to sharing everything we know about how to write a business plan with the Deca and small business community. Take a second to follow us at the Level Up Podcast _ for updates, and find weekly episodes at the Washington Deca Instagram, as well as on all platforms and within the BD local media Facebook and YouTube pages. We hope to see you guys next week, where we will be taking a look at how to figure out your logistics and key metrics. Thanks again, and we can't wait to compete in Deca this upcoming season with you. And for you small business owners, go kill it.